Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BANKCOMM interim report. The Bank of Communications Co., Limited, offers a wide range of financial products and services to both individuals and corporations. These include deposit accounts, savings deposits, time deposits, demand deposits, call deposits, and foreign currency deposits credit facilities, new housing loans, second-hand mortgage loans, unsecured personal loans, and corporate loans wealth management services, personal wealth management, advisor services and institutional investment consulting trading services, precious metal and commodity trading, bond underwriting distribution, and consignment sales of precious metal products payment and settlement services, cross-border interbank payment system, clearing and settlement for future markets, and bank derivatives transfer corporate banking services, corporate structured deposit, corporate cash management, industrial chain finance program, syndicated loans, corporation overdraft, and investment banking services, offshore banking services, repayment financing, inventory financing, accounts receivable financing, and accounts payable financing insurance services, institutional insurance services, other services, training and consulting for cooperative banks, bond account activation, bond distribution, and transaction services. The significant increase in BANKCOMM's stock price over the past year can be attributed to several key factors. Firstly, government stimulus measures announced in September 2024 provided a boost to the broader market, including BANKCOMM. Additionally, reports of a potential capital injection of at least 400 billion yuan into major banks in February 2025 were seen as a positive development for state-owned banks like BANKCOMM. Improved financial performance within China's banking sector, particularly among state-owned enterprise banks, also contributed to the increase. These banks reported their best first-half revenue growth since 2022, indicating a healthier financial environment and stronger operational results. Furthermore, BANKCOMM's growth in insurance agency business and positive analyst ratings and price target upgrades from institutions like J.P. Morgan have further supported investor sentiment. Lastly, the overall market performance has been strong, with the Hong Kong Stock Market Index, HK50, increasing by 44.78% over the past year. This rising tide has lifted BANKCOMM's stock performance, making an increase of over 27.45% plausible and driven by these positive news developments and market sentiment. The primary drivers of revenue growth for a financial institution can be summarized into several key areas. Digital finance has been a significant contributor, with an 8.52% increase in internet loans and the expansion of inclusive finance and sci-tech finance products. The company has also seen increased new customer acquisition, up 28.89% year-over-year, and a 49.94% year-over-year increase in new issuance of financing, amounting to RMB 35.988 billion. In addition, the institution's investment banking business has grown, with RMB 77.04 billion in bonds underwritten, and equity investment agreements totaling RMB 4.5 billion for key Shanghai municipal projects. The wealth management segment has also seen growth, with a 6.18% increase in personal deposits, 2.83% increase in personal loans, and 5.52% increase in assets under management, AUM. The company's private banking business has experienced an 8.94% increase in balance of personal business loans, and the wealth management products managed by BANKCOMM Wealth Management Co., Limited, have grown by 5.15%. The institution's insurance services income has increased by 13.06%, and its operating revenue has seen a significant jump of 21.17%. On the other hand, the primary drivers of revenue decline are limited to two areas: a net profit decrease of 19.29% year-over-year to RMB 636 million, and a net profit on the books decrease by 64.45% year-over-year to RMB 532 million. Net income and profit margins overview. The company's net income experienced mixed changes over the period. While it increased by 1.61% from June 2024 to June 2025, it decreased by an unspecified amount later on. However, a closer look reveals that net income actually increased in most instances, with a notable increase of 1.2% from RMB 45,825 million to RMB 46,455 million. Profit margins also underwent significant changes. the operating profit margin saw a 2% increase, while the net interest margin rose by 1.4%. However, the annualized return on average assets decreased by 0.04 percentage points. Notably, the decrease in net income was attributed to a decline in profit margins across most regions. The reasons for these changes are multifaceted. The increase in cash inflows from customer deposits contributed to an increase in operating activities cash flow. Additionally, interest expenses on issuance of bonds and others led to an increase in profit margins. Overall, the company's net income and profit margins exhibited mixed trends over the period, with both increases and decreases observed. The company's financial performance indicates a strong ability to generate positive operating cash flow. According to the provided data, in 2022, the company had an operating cash flow of RMB 53.479 billion, which is a significant net inflow. Furthermore, the net cash flows from operating activities for 2025 are projected to be 52,282 million RMB, also indicating a positive trend. This suggests that the company has a stable financial position and is capable of generating sufficient cash flow to support its operations. The company's debt level and interest expenses have undergone significant changes. The total liabilities have increased substantially, with a notable rise of RMB 98.149 billion from December 2024 to June 2025. Conversely, interest expenses have shown a slight decrease in some instances, such as a 10% drop from 2024 to 2025, and a reduction of RMB 7,387 million from June 2024 to June 2025. However, the net interest income has increased by 1.2% from June 2024 to June 2025, indicating that the decrease in interest expenses is not entirely offsetting the increase in debt level. The financial performance of various segments and regions within the company has shown mixed results. On a positive note, corporate banking and treasury businesses have seen significant growth, with increases in market share from 48.1% to 53.51% and 12.1% to 30.43%, respectively. Overseas banking institutions also performed well, contributing RMB 6.152 billion to the group's net profit, while countries along the Belt and Road saw a notable increase in business volume of foreign-related letters of guarantee by 24.47%. However, personal banking and other businesses experienced declines in market share from 39.37% to 15.9% and 0.43% to 0.16%, respectively. Geographically, North China, Western China, and overseas regions saw decreasing liabilities, indicating a decline in financial performance in these areas. Management's outlook and strategy. Focusing on stability and growth, the company's management is committed to seeking progress while maintaining stability, with 5 key priorities driving finance and strategic development requirements. The focus is on enhancing financial functions, improving efficiency, and prioritizing areas such as credit support for national strategies and weak links. A key aspect of the strategy is building a Shanghai-based bank through digital transformation, promoting the 145 strategy, which encompasses sci-tech finance, green finance, inclusive finance, aging finance, and digital finance. The company aims to develop core competitiveness by positioning itself as a main provider of stable fund products. Management has also emphasized the importance of green finance, investing in clean energy, energy conservation, and environmental protection to promote a green, low-carbon, and circular economy. Additionally, the company is committed to maintaining stability through active management of liquidity and minimizing liquidity risk. The outlook for the company appears positive, with key highlights including a 24% increase in profit before tax and a 1.7% increase in net profit for the period. The issuance of RMB 30 billion in bonds and proposed cash dividend further demonstrate the company's commitment to growth and stability. The company has a history of paying dividends. This is evident from multiple pages in the financial summary, where it is explicitly stated that the company has paid dividends. The amounts and details of dividend payments are also provided, including the amount paid to ordinary shareholders for the 6 months ended 30 June 2025. That concludes the financial summary for BANKCOMM. Feel free to comment below, and I will be happy to answer them when possible.